Welcome guys to this brand new scalping course. Now, you're going to see straight to the point, guys. We're going to get straight to it. We're not going to go through any slideshows or any of that gimmick. This here requires actual concentration, management of mind, body, and understanding what to trade and what not to trade. So let's just get right into it. It's actually pretty simple, guys. This is so easy, this trading style. So easy. Anybody can make money doing it. There's 50-50 chance. You don't need courses. You don't need signals for this. You don't need anything. Just pay attention. Here's your Wall Street 30. You'll see this in every platform that trades futures. You'll see this. And that's what we're trading here. Futures or spread betting. You'll see this setup. Forget this, right? This is usually when as a beginner, it messes you up. It's like, what the hell is this? Just block it. You don't need to know any of this here for now. Just forget these. This is the price here, by the way. And this is how much the daily change is. So US Tech 100 is the NASDAQ. Wall Street 30, we said it was the Dow Jones. US Tech 100 is the NASDAQ. US 500 is the S&P 500. What is this? These are the indices of the stock market. Okay? They represent the stock market. US Tech 100 represent technology stocks, the biggest 100 technology stocks. And Germany 40 is the DAX. Again, the indice for Germany, and UK 100 is the indice for London, which is the UK. Now, I need you to master one thing. I like to master US Tech 100. I'm a master of this, guys, and that's why I always trade it. I know what to expect with it. I know there's always volatility with US Tech 100, always. But for today, we're going to trade Germany 40 and use it as an example, just because it's actually the market open in Germany, because the market is open, and I'm making this when the market is not opened. So here's your Germany 40, your average chart, guys. The first thing you want to do, it's actually one thing, right? Establish support levels, resistance every day. Come in and establish something called support level and resistance. So here's your support and resistance. You don't need anything after that. No trend lines. You don't actually need. It's simple. This is so easy, guys. A monkey can do this, because it has nothing to do. What I'm about to teach you, your success has nothing to do with actual identifying setups or identifying when to trade. It's majority of it's psychological. Most of you are gonna make money, and your first. I mean, I had a guy turn 1,000 into 10,000 just for him to lose it like a month later. All right. I mean, these are the stories. I can give you more stories. I, for one, did like a 10x in 1 week or in 1 day, because I'm using 1 to 200 leverage. But then the more you trade, it's easier to lose it. So here's your Germany 40, guys. Okay, you're a scalper, so you care about 1 hour. So 1 hour, come here to the draw. You want to get support levels. Now, how do you know where support is? There's actually a video on that, but I'll make it again here. You're looking for a candle that looks like this, always. So, see this? A candle which has this body, this wick. So you can see this. This is one. It looks exactly like it, but this is the current candle. So of course we can't use it because it's the current candle. This is the current price. But we have to look to the left-hand side. Look what we find. Look what we find, guys. Boom. Okay. Let's zoom it in. You see? Let me zoom it in now. So you know we're looking for a green candle. That's how we find support. We're looking for a green candle with a plus sign. So you see? I just zoomed it in now. Okay. So there's one. You see the wick, the way it's exposed? And then there's another one here. There's actually two more here. These two. So that tells you the market is actually a support right now. So look. So I get a line. So actually it's touching it right now. You see here? It's right on it. I can actually open a trade right now. Look, we'll just do 2 contracts. Look. It's right at support, right? Right on support. Sometimes it goes to the body, but it's right on support. Look, 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 look. Look, you see? Right on support. I opened 2 contracts. This can go give you a few points here. Look. Okay, here's $5. Just like that. You see that bounce? Only on 2 contracts. I literally just made $5 while explaining this, guys. That's how simple it is. Okay, because you're a scalper. So you just took that bounce from here. Now, after that bounce, you look for another support. Maybe you say, maybe this support is not enough for this price to push up. So you kind of look down, you go down and look for another one. You look for the wick now. Sometimes the market also uses the wicks. You see, it turned red after I traded that. So the wick, which is this one, you're also looking for this as support level. Now, I need you just to understand one thing. This is your golden or go-to candle. Okay? Looks like this. You just seen it. There's another candle, which is this one. When there's a wick exposed, like a spike, you know, if you fall on a spike, and you basically goes into your ass, you jump, right? You jump. Think of it, you're jumping down from a tree and there's a spike, and then you fall on the spike. What happens to you? You jump and you scream, you know, because it's a spike. Well, similar here. You look to the left, but not just any spike. You're actually looking for the red candle, for the green candles. So it looks like this, something like this, and then something sticking out like here, just like this one. Okay, so there's two candles you're watching now, and sometimes the spike is also on the inverse. This one here. So you see. So you're looking for these two candles that looks like this, and then the plus sign candle, of course. With a body exposed. 3 candles that I use for support levels, and you'll see me every time you watch my videos. You'll see exactly that's what I'm looking at. This here can also go to this level, which is the liquidity grabs, but for now it's trying to aim for the spike. You see it here? See the spike? And you say, well, how do I know that's guaranteed? Well, that's because everybody is viewing it this way, and everybody knows that's exactly how the market is going to react, or where the price is going to go before jumping. They know all the prices, all the positions are opened at these levels. Now, that's the simple part of scalping. Now let's imagine we're on the wrong side. The market is kind of down. Let's find a resistance level now instead of support. And you will see these, by the way, on the hourlies and on the 15 minutes. Let's use US Tech 100 maybe. Yeah, this is better. So, remember what we said about green candles earlier? Well, here is now we're using a red candle that looks similar. Okay, so we're looking for something that looks like this. Red this time. This is now for resistance. Earlier was for support. Now look at it. This is the current price, and the resistance means the ceiling. So you see here, this is 1, but we're also looking for a candle that has something exposed like this. Okay, and that's this one. So there's 2 resistance. And that's why the market is struggling. So what does that tell you? That says, well, when it comes to this level, I'll just open a quick short position. You're not aiming for like 15 or 20 points, guys, in these trades. No, you're making 10 points and bouncing. So if you have one contract open, you make $10 on 10 points. Okay, and you slowly build it up. And I'll show you now. I mean, you guys have seen my YouTube video. You literally hit it and quit it quickly. So look, this is now going to this level. We can open a short in a minute. So we're gonna use the first, initially the wick of it, of that red candle. Okay, and then we'll use the body. So the wick is also a little bit of a resistance, and then the body is a bigger resistance. I'm sure you guys know what a wick, you know, the wick of a candle, the string, an actual candle. That's what it means. Here, this is the wick, the string of the candle. You see here? So you can use that as the resistance. And how do we know? You say, well, how do we know that's resistance? Well, the market is an algorithm. It will go from levels before making a certain move. Okay? It will go from level to level before making a certain move. And if we zoom it into 15 minutes, you can see a better picture. So start with 1 hour. Usually 1 hour gives you better understanding. I use the 1 hour to get the best resistance and the best support, and then I zoom it in. just to get the good entry, the better entry. Because so in this case, market could actually come to this level. Okay, so because of these, you see here on 15 minutes, you see there's this, there's these as well. So there's literally the trifecta that I'm looking for. 2 of these, okay, 2 of these. Here's 1, here's 2, and then 1 of this. Okay, so just have a look, pay attention. Here's 1. This is the one we usually look for resistance. Remember we said the plus sign. Here's 1, and also we're looking for this. So it's just 2 candle types for both, but different colors. That's it. It's simple. So let's just wait and see. Yeah, this is gonna take long to get to resistance. But resistance doesn't mean from there sells off heavy. No, it will reverse a little bit, give you a few points, you make your profit and you walk away. That's what you're looking for. And you can do this on any time frame, by the way. But I like the 1 hour time frame because it's crisp. You can see it better. So use 1 hour, okay? If you want like crystal clear trades, and then 15 minutes just to get the good entry or the exact price. Now, stop losses, how much you're going to use in stop losses. So it depends, guys. If the market is open, you would use less contract size. Okay, so for example, if I'm able to trade 10 contracts on my account, I will use 2 contracts. The reason why you do that, your job is to survive. It's not to make money, guys. If you can survive the market, okay? And if you take, because you will take losses, you will be wrong. If you take 2-3 losses and you're trading big capital, you will blow it, by the way. And now your buying power is low. So if you try to climb back again, it will be a problem. Because you don't have the same amounts of money. So now you're doing one of 2 things. Either you're waiting to make more money, or number 2, okay? Number 2, you're exposing yourself or depositing more money. So you're waiting to make more money. What does that mean? It means you're holding that trade longer, even though the chart is telling you there is no more left in that trade. But if you hold longer and you end up losing eventually, or you're adding more money in, and then it just becomes and you keep making that same mistake. Yes, it will work out 1 or 2 times for you, and you make money, and it will be good amounts of money, and you'll be thankful that you went long on a bigger position, or went short on a big position. But that one time, and 100% coming, guys, it's coming guaranteed. That one time will wipe you out. And that's why you should use contract size, like 2 contracts. If you're able to trade 10, use 2 contracts. Okay, if you're able to trade 10 contracts, use 2 only, or 3 max, because you want to have a little bit of leeway. You want to have kind of the ability to make losses. So look at the way this is approaching this. See this? Once it gets to this level, you can hit a short on that, and it will probably give you a few points. And you can add a lot of things with this style of trading. You can add your own, but you can make money doing anyhow, guys. I can literally here's a buy position, for example. Okay, you could do anything. You could just press buy, you can press sell, and you will make money. The problem is, there's a huge problem here, and the problem is your position sizing. What happens when you do take the loss? The stop loss. How many times do you get stopped out? You see yourself in the red. What do? Do you double down, or do you just take the red and walk away? Do you try to come back and make a green because you just want to see yourself winning? These are the psychologies. Look at this, for example. Did I time this wrong, or what's the problem? No, this candle just ended up turning from a breakout candle into a dancing candle. But this is where your stop loss gets triggered. I didn't have a stop loss for this one, but this is where a stop loss gets triggered. This is a buy position I opened, by the way, because I said if the algorithm is to go to resistance, then it will certainly go to resistance, give me a few points, and it will before selling off, by the way. Let's talk about stop losses while we're at it, guys. A stop loss should be opened before you open the trade. On average, if you're close to your entry, use 15 to 20 points max, okay? So even a 15 point stop loss is like a $45 loss. Imagine I only have like $500. That's already 10% of my account. $500. To lose $45 is already 10%. So it's problematic. So always your stop loss needs to be around 15 points. How do I know it's 15 points? Because I've tested it. I know the volatility for this. Right? On average swing for the NASDAQ. And that's what I mean when I say master it. So you can't go into a different instrument and use the same stop loss, because you will get stopped out because you don't have a clue what the required stop loss is for that instrument. For me, the NASDAQ, I understand it's 15 to 20 points on market opens, right? And then pre-markets, I would use a 10 point stop loss just because the volatility is low. Okay, so that's your 10 points. Now, the limit order is how much you should take from the trade. Well, to me, guys, 10 points is like the average. I'll take 10 points, I'm happy. If I take 10 points, I'm a happy guy. If I take 7 points, sometimes I'm a happy guy because I accumulated, throughout the day. Second stage of this, over trading. That's problematic. Over trading, guys. You will overtrade to the point of exhaustion and to the point of gambling and to the point of wiping your account. The reason why you overtrade is because you're scalping small and then you're just staring in front of the computer. And boredom, guys, is a problem. You can't be bored, because if you're bored, you'll just keep scalping and and blowing, scalping and blowing, scalping and blowing. So you want to just be careful here in this case, guys. Okay? Don't be that guy. Do yourself a favor and don't be that guy. Okay, so over trading means doing it too much. So set yourself a goal, an hour of the day when you should trade. Usually market open has the volatility, and then later on in the day. So after you finish work. So, but the first 1 hour of market open is where the volatility is. You will make 3 trades, 3 to 5 trades, quick scalps. It will add up to a decent amount, and you will walk away, come back later on. But do not keep pushing the button, guys, because what's differentiating you from a gambler if you keep doing that? Opportunities are every single minute, guys. It doesn't mean go take it, because you're just a gambler. And I know it's so easy to say this, and it's so hard to do, guys, because I've done this before. I've sat through for hours trying to grow an account. If my mind is to grow an account, or even is to impress you guys, is to impress somebody, it actually backfires. So don't do that. Just set yourself a target. What do you do when you make profit? You withdraw it. You walk away, guys. You withdraw it every day. Try withdraw every day. And if you use the same platform I use, then you will probably receive your payout on the same day if you're from Europe. Everywhere else is probably the next day. So that's how fast it is. Don't think, it's going to take 3 days. No, you'll get it like this. Right? You'll get it sent from their banks, one of their global banks. So just understand this. Withdraw profits. Don't try to attempt to grow an account. The more you have in your account, the more you start to think, this is not my money now. I need to I can risk that money. Yeah, by the time, before you risk that, when you risk that money, what ends up happening? Guess. You actually start to lose, and then when you lose that money that you made, then you're tapping into, the losses are tapping into your main capital. And before you know it, you spiral down because you want to recoup whatever money you made. So, that's a problem. Okay, so I'm just going to take $3 here. I'm literally just scalping here, guys. And, making this course already, I got paid $7 just for this while I'm scalping. Like, anybody can make money, guys. Anybody can make money. What happens if I get stopped out? I relax. I go reevaluate. Look again. Yeah, so it'll probably come to here. It will most likely come to here. Definitely come to here. This is 15 minutes. Once it comes to here, but I feel like this here is actually going to be... Yeah, so this will be a short position because I notice this here is at resistance. And then it will come down, grab liquidity, and then push up higher. But yeah, let's assume I take this loss. Let's assume, I'm wrong. Maybe I don't want my stop loss. Maybe I'm wrong here. What do? I keep my finger on the button like this all the time, and I'm like, if it breaks a certain level, then I'll close it. Okay, and I don't suggest you guys trade with your phones, by the way, because you won't focus on it. Yeah, so I'm like, okay, $4 taken. I'll walk away from the screen now because I took the loss. Assume I didn't take it because of my stop loss. I walk away from the screen, come back, and I look at the screen again. Maybe I see something different. Maybe this setup is not where I'm going to be making money. Maybe it's in the next candle. The next candle will be better. Maybe the next candle is something that I've seen before. Okay, so all of these are psychological factors that you can use, or just talk to yourself, guys. But you want to survive, stay small. Okay, stay small, guys. If you're small, you'll survive, and if you survive, then you're making money. Okay. But literally, guys, that's scalping, guys. I can sit here and tell you, oh, look at this candle, look at the wick. Yeah, that's liquidity. Yeah, we get it. That's liquidity, guys. Yes, we get it. This is a gap fill here, gap fill that. Smart money this, smart money that. We get it. The problem isn't that. I can literally press a button and make money. But you see how quick I lost it as well? I lost some of it just now. Yeah, so this is a breakout here. See? Because we're going to that level. And then I'll just walk away once it gets to that level. And, I only open 3 contracts. So if I take 1 point, that'll be like $3. And I'm just trying to practice here with you guys. The other stuff, the trading, you'll see on the thing. But sometimes you might think, oh, I'm right here. And then you have a stop loss just for this trade to come down, take you out, and stop you out. But then you're like, oh, maybe I'm too early. And you're right. You're probably too early. But this was a different candle. One of those candles where it's actually playing with your stop loss. And the stop loss is what it uses as fuel to go up in value. So I'm just going to close this. So you have to try again with that trade if you were to get stopped out. But guys, make sure to withdraw. Always withdraw. Always withdraw. Always withdraw profits. Okay, that's me done. Thank you guys for watching. Hopefully you learned something new. Bye.